You signed the papers with a smile on your face, but nobody told you that the dealership just made more money off your loan than they did off the car itself. You sat in that tiny finance office for 45 minutes, exhausted, excited, ready to drive off, and the number they gave you felt fine. $280 a month? Doable. What they didn't say is that the interest rate you got approved for wasn't the rate you qualified for. It was marked up, quietly, sometimes by 2 or 3 full percentage points, and that markup went straight into the dealership's pocket as pure profit. This isn't rare. This isn't an accident. It's a system built decades ago, and it still runs today almost untouched. Back in 1968, Congress passed the Truth in Lending Act to protect buyers from hidden costs like this. But dealerships found a loophole that survives to this day. They don't lend you the money directly, so the disclosure rules bend just enough to let them profit from what's called dealer reserve. Millions of Americans have unknowingly paid thousands of extra dollars in interest over the life of a car loan, money that vanished so silently most never even noticed it was gone. And the finance office wasn't done with you yet, because right after the interest rate got buried, they had one more trick waiting, something even more expensive and even harder to spot.
After the rate got locked in, the finance manager slid a folder across the desk, casual, like it was nothing. Extended warranty, gap insurance, paint protection, fabric coating, each one framed as just a few dollars a month, rolled quietly into the loan so it never felt like real money leaving your pocket. But stretched over 60 or 72 months with interest compounding on top, that small addition can balloon into 3, 4, sometimes 5,000 extra dollars. Money financed at auto loan rates instead of paid outright, meaning you're paying interest on products you may never even use. This is why the average new car buyer leaves the lot owing more than the car will ever be worth again the moment they drive away. It's not bad luck. It's not carelessness. It's a business model that dates back to the 1980s, when dealerships realized financing and add-ons were more profitable than the vehicles themselves, sometimes generating more net income than the actual car sale. Bobby found this out the hard way. He financed a used sedan, trusted the numbers on the screen, and didn't realize until 2 years later, refinancing through his credit union, that he'd been paying nearly 4% more interest than he ever needed to, plus a warranty he never once used. The scariest part isn't that this happens, it's that it's completely legal. And the reason it keeps happening, generation after generation, comes down to one uncomfortable truth about how dealerships are trained to read you the moment you walk through the door.
Dealerships train their finance staff to watch your body language, your tone, how fast you say yes. They're taught that most buyers are more focused on the monthly payment than the actual price or interest rate, so that's exactly where they aim. But once you know the game, you can walk in and flip it completely. First, get pre-approved through your bank or credit union before you ever step onto a lot. That gives you a real number to compare against and instantly kills their ability to mark up your rate, because now they have to beat your offer instead of inventing one. Second, negotiate the price of the car and the financing as 2 separate conversations. Never let them blend the two, because that's exactly how the add-ons slip in unnoticed. Third, if they mention warranties or protection packages, ask for the price in writing, then say you'll think about it. You can always buy those later, often cheaper, from an outside company. This isn't about distrust for its own sake. It's about walking in prepared, the same way you'd read a lease before signing it. Bobby refinanced, saved himself real money, and now tells everyone he knows to shop the loan before they shop the car. You can do the same thing, starting with your very next purchase. If this opened your eyes even a little, hit like, subscribe for more of these hidden money traps, and drop a comment telling me about the moment you realized you'd been quietly overcharged. Your story might help someone else avoid the same trap.